Roll call. I see Councilor Maynard, Councilor Robertson, Councilor Gardner, and Councilor Perry. Is there anybody else there that I don't see?
Councilor Osher?
Oh, I'm sorry. I didn't see Councilor Osher.
Good evening, all.
Good evening and congratulations to you.
Oh, yeah, that's right.
Thank you very much.
Big win. I wish all elections were like that.
It's an honor to serve, and I'm so pleased that we had such a great turnout, although my goal was that we had a higher turnout than 08, and we were off by 522 votes.
Oh, wow. I'm
We
surprised.
suspect, Lori, that the reason for that is that many of the students actually voted in their home districts. So we probably had a very high percentage of, full-time residents voting, maybe not as high a percentage of the students voting in Orono.
Oh, it was amazing, and I was surprised that it didn't go over 5,820 because you folks did a great job of making it available to people. And even when it was those raw days, people stood in line at October 17th in the field house. I was really, I assumed weeks ago that we were going to beat the previous numbers, but I'm sure that you're right, that there's so many students that are at home attending remotely, as my kids are at home attending their schools remotely, that they voted where they lived. We can't
I'm
hear
sorry,
you,
Tom, you're muted.
Tom, you're muted.
Unmute. Okay, I think I'm unmuted. Hear me okay? So we're going to move on to review of preliminary FY20 auditors financials. And I assume that's Sophie.
It is. So normally in the past, I have waited until we have the books all bound and you've had an opportunity to sit with the audit, and then I do an in-depth discussion of the audit for you. I am instead this year going to break this down and come to you twice, simply because as we begin to make some decisions moving forward and some of the things that were said in the bond rating documents led me to think that you guys should really get just some high level information now. And we're not exactly sure when Casey is going to be able to provide the bound books because he's waiting for the templates from the National Association to give those to him. So I thought I would share my screen and do what I hope is super high level and just what folks are looking for. So the first thing I wanted to talk about is our net position, because that's kind of our overall health. I want to remind folks that we present our books, our financial statements in an accrual method, which recognizes expenses when they are incurred, not necessarily when they are paid, and it recognizes revenue when it is levied or expected, as opposed to when it actually comes through the door. So as you go through the audit, when you have it, you'll see we report some things on a cash basis, just for your information, but the books, according to GASB, have to be done on an accrual basis. With WPCF, it's a modified accrual, but we can get into that when we do the full audit. So the net position is giving you all the information about our assets, with our deferred outflow of resources, liabilities, and our deferred inflow of resources. The difference between them is the net position. Have I lost anybody thus far?
Well, that's good.
All right, good. So at the highest level, the governmental, which would be essentially the general fund net position increased by $16,750 from FY19. And if you'll notice, we went up significantly between 18 and 19, and we've held that. So there were incredible gains in our net position because we invested more money in capital assets last year than what was depreciated off the books. But at the same time, we had some long-term liabilities related to retirement and benefits after employment that really tempered that. So it was about $16,750. The other COVID-related change here was about $30,000 related to accrued compensation. So at the end of each year, we look at the compensation that we have on the books, the accrued benefit time we have on the books, vacation time, and we multiply it by the person's wage, and it gives us a dollar value. And between last year and this year, that liability increased about $30,000. That, when we trace back, you can look at the fact that for the last more than just about quarter of the year, people weren't allowed to take vacations. People weren't, if they were here working, they weren't allowed because they were an essential worker. And if they were home, they were on leave anyway. So we have some significant accrued leave balances. And as COVID hopefully leaves us, we'll have to look at ways that we can begin to knock those back. So when you see business type activities, we're talking about WPCF, and the net position in WPCF decreased by $268,000, which if you look at the graph from 2015, it's steadily decreasing. And we've talked about this a little bit. It's primarily based on the fact that our expenses are increasing, our consumption is decreasing, our revenues are decreasing, and we are not putting away money or making investment in the system at a rate that compensates for the depreciation of the system. So that is something that we really need to address when we look at our rate structure, which hopefully should happen after the first of the year. So when you think about the whole town, because when our creditors look at us, they don't really separate WPCF from the town, even though we do in our accounting. The whole town lost about $250,000 or 1.4% in the net position. It's important to note that 30.7% of our net position is available to actually use to decrease or to meet our obligations. Oh, no, that was not intentional. I did not mean to be in. How about I present it? There we go. So this is down. Last year we had 37% of our net assets were available to meet our obligations. So I know council likes to look at the audit on a budgetary basis. So we budgeted that we were going to receive $17.5 million in revenue. We actually brought in 17.4, so we were short about $160,000. We budgeted that we were going to expend $18 million. We actually expended $16.9 million. That variance of $1.1 million. That $1.1 million includes some transfers that you made, interfund transfers that were made after the close of books. So just keep that in mind. It wasn't like we had $1.1 million that just didn't get expended and just lapsed. So on a budgetary basis, we thought we were going to end the year about $480,000 in the hole. We actually ended up about $500,000 with a variance of almost $1 million. That looks pretty good. So to get to that place, we had budgeted that we were going to use $1.2 million of fund balance. So that would have been through the undesignated fund or accumulated reserves or assigned funds. We actually only used on a budgetary basis $614,000, which is about half what we had expected. So we really outperformed this year, which the rating agencies definitely picked up on as a pattern for us, which is good. So I think this is Tom's favorite slide, where we look at the actual fund balance. So at the end of the year, we had about $15,500 of non-spendable. For us, that non-spendable could be many things, but for us, it is our gas and diesel inventory. So we've paid out money and that inventory sits there and we have not used it. So we expense that as we use it. Restricted funds are our tax increment financing district funds. Assigned funds are all of the reserves, along with what you assign to use to for the previous in June, you assign an amount from undesignated fund that you are going to use to offset the budget to reduce commitment. That ends up in the assigned fund. And we have $1.8 million of unassigned. So we're at 6.6 million. So how does that compare? So non-spendables up about $1,200. Our restricted, so our TIF funds are down about 88,000. Assigned funds are down about 668,000. Now, considering what we had assigned to expend on the out of various reserves, that is a lot less of a draw than we would have expected, and that's tempered with the $300,000 that we put into the infrastructure reserve at the end of the year. And assigned is down about 180,000. So if you're paying attention, you might ask, but Sophie, you said that on a budgetary basis, it was only $614,000 that we ended up using. So when they calculate the fund balance, they're looking at the budgetary basis, but they also look at the assigned funds, reserve funds. So what the money we have held in reserve. The money that we had held in reserve decreased $21,000 overall last year. So you add the $614,000 draw and the $321,000 draw, and you have the total draw or decrease of $936,000. So this is something we really want to be watching. We heard it from our raters that this continued draw on fund balance is not a pattern that they want to see. Each one of them gave us different levels that if we dropped below, we would have to, they would bring us back for a decrease in our rating.
Right.
So when we look at WPCF, that is, we had budgeted operating revenue of about 1.5 million. We brought that in. We had expenses, but we also have some non-operating revenue or expenses. So the audit shows the WPCF budget differently than you see it. We try to create it in a way that makes sense for you to look at it. We do not budget for depreciation, which is included in the audit operating expenses. But the interest expense is considered a non-operating expense. So at the end of the day, the numbers you see here include $601,000 of annual depreciation And your non-operating expense is includes $239,000 of interest expense that was softened a little bit by $30,000 of investment income. When we look at the piece that is not comfortable for me is that we ended the year at a net operating income loss of $129,000. So that's what we want to try to address with our rate discussion. So people always love to hear about property taxes. It's our largest revenue stream. We committed a little over $13 million in property taxes for FY20. This is a decrease from FY19 of about $139,000. We at year end had $239,000 outstanding. That is a decrease of about $25,000 from last year. And our collection rate actually increased about 0.16%. So it went from 97.99 to 98.15. The other kind of interesting piece here is this report's current year. We want to look at prior years as well. And for all taxes, we have $466,565, which is up about $20,600 over last year. Part of that that we want to look at, especially if we have some additional room in our budget this year, is to write off some of the personal property accounts. So we did that a few years ago.
Yep.
We waited. We need to do some more from accounts that we know we can't collect from. And that's what I have thus far.
Thank you. It was very informative, and I like the high-level review overview. Any questions from council members? We are going to hear more about our audit when books are ready and we actually have a sit-down discussion of the entire thing. We'll probably do a Zoom meeting with our auditor at that time. So this is just the first phase of all of that information.
Can I just ask one question, Tom?
Sure.
Is the virus, all the events around the virus, is that integrated into these reports at all? Like, is there any, like, as a forgiveness kind of thing, I guess?
I'm not sure I call it a forgiveness, but we had to report as part of this what kinds of activities we were expecting or had already undertaken with regard to the virus. If we thought that there was an imminent concern about a major economic change, we would disclose that. And one of the things that's taking me a little bit of time is I have not only the notes to the financial statement that I'm working with Casey on, but also the management discussion and analysis, which is our job to do, not the auditor's job. And we need to really speak to how how COVID is impacting us. So there's a blurb that goes in there. And then there was a blurb that I also provided to Casey about it.
Thank you.
Any other questions? We ready to move on to item 3? I guess we're going to do item 3 and 4 together, Sophie, as you indicated. And item 3 is overview of final bond sale and budgetary impact. And item 4 is proposed FY21 budget adjustments.
You're muted, Sophie.
On October 15th, we went to market. Tom sat with me as we heard about what the market was looking at like. When we started this process, the market was really, really good, and it looked like we would hopefully be able to save about $650,000 over the life of the bonds. As we got close to the sale, our sale happened the week after the president disclosed that he had contracted COVID, and it did really funny things to the market. But ultimately, it wasn't that bad. We actually brought in at about $414,000 of savings over the life of the bonds, which is, I don't think that's something to sneeze at. I think that's good. I will tell you, it has been incredibly confusing to work through this because we have two different series of bonds that are treated two different ways, and not all of the bonds were called. So we have some payments that still need to be made to the original bondholders for the bonds that weren't called. And we will be doing that for the next 3 years. So this year and then 3 more. Questions about, so the other piece that was interesting, I will just say is every year is a separate bond that gets sold. And Piper Sandler went out to the market and they had put the pricing that they wanted to get for, they wanted to sell the bonds for. And people called in and, took them. And when you had more than one person or entity calling in on a bond, you then went back out to the market at a lower rate to try to get them to, you just kept seeing how far you could get them down. As you, there were a few of the shorter term bonds that had a little bit of competition. But as we got out longer, we had a little over $1 million in bonds that did not get any interest at all. Working with Piper Sandler is good because they then had to pick it up at the right rate that they put it out to market at. So we ended up in pretty good shape. We're right around 2%, which is higher than we had wanted, but a lot better than what we were doing. Any questions so far? Okay.
So Sophie, the 2% is the interest rate we're paying it back on.
Yep, it's an kind of an average, Cindy. Some of the later ones are up in the 5%, but there are better rates on some of the shorter ones. That makes sense? Okay.
So the average over time is the 2%. Is that right?
Yep. Yep. So this is the kind of complicated page, but when you look at the different debts, and I tried to put titles on them that would be familiar to you. And in the first column is the actual debt name. And the second column is what we had in the budget. So what we had adopted in the FY21 budget to pay that debt. I have not broken this out into principal and interest because I assume you trust me to pull things off an amortization schedule, and it keeps it a lot cleaner this way. Then with the bond refunding, we have some changes that we need to look at. The first two are the new money, and so we need to give them a budget. The second one is USDA, and just the way that fell, we had to make a payment before the actual bill, the refunding happened. So we ended up owing a little bit more this year, about $8,800 more. We will see some savings in subsequent years to offset that. But we're going to need to take a little bit more money out of the TIF to cover the USDA, the old USDA loan. Streetlights, a similar issue. We had to make a payment. We sold the bonds on the 29th, but the payment was due on the 27th. So we made the payment and we now have to pay interest again. So it's a timing issue on that. The Public Works Garage, we're actually going to see about $56,000 that we had budgeted to expend that we're not going to need to for that. Parking, about $3,000. Town, so town is the debt associated with the sanitary storm sewer separation project for the Sailor development. And we'll see about $18,000 worth of savings there. And then WPCF will see about 77,000 this year. So my thought in this now would be to adjust the on the town side, adjust to show the new debt, leave the rest of it where it is for now, with the exception of $10,000, which I would move from the garage, I think, for the initial budget mistake where we dropped lines and approved $9,000 that didn't make it into the final budget order.
Right.
Otherwise, I would leave things where they are because we can explain that easily in the audit that there was this savings because we sold this debt.
Right.
So that would be my thought if you're okay with that.
Makes sense to me. Anybody else want to comment on that? I think we're
Makes
good at
sense.
that, Sophie.
I like it when I make sense.
Oh, hey, you're doing a good job right now.
All right.
So we're ready to move on to personnel policy revisions needed to comply with law changes effective 01/01/21.
So the impetus for these changes in Article 5 of Chapter 28 of the town ordinances is that the state legislature passed a law that required certain types of employers, which the town is one of, to allow people to accrue benefit time, so paid time off for 1 hour for every 40 hours that they work. So for our full-time people, that really doesn't matter because their benefit accruals comply already without having to do anything. And even for our permanent part-time people, it doesn't matter. Where we come in are per diems, our substitutes, people that are not regularly scheduled to work 20 hours a week or more for us. So if they work 40 hours in a year, on that 40th hour, we are obligated to give them an hour of paid time off, and they just accrue it. So I need the ordinances to comply with state law. So that was the impetus. As we go through the changes, you will see that I did things like capitalize the T in town because the big T is the employer, the little t is the community. And town council, town manager, I changed the he's to they's and theirs. If I've missed it, I will definitely let you know.
You missed one that I
Okay.
saw on page 6. They're not numbered. It's way down at the bottom. It's number 4.
Okay. Oh,
Actually,
I get it.
Sophie, I saw several that were missed, and
I'll have to
rather,
go back through and look
rather than us
again.
pointing them out, I'm sure you'll see them.
Yep.
The first
Yeah,
one is right on
there's
page
some more.
1.
All right, I will go back and look again. So some substantive changes before we get there, though, I made to try to bring the ordinance in compliance with the way we do things. So we do things based on best practices or history, and there are places that just the ordinance wasn't brought up to snuff.
Yep.
So on the first page, at the end in section 2874, we offer short-term disability insurance. And so I put that in, that it was short-term.
Yep.
In 2875, I wanted to make it clear that we provide retirement to qualifying part-time employees, and the qualifying is based on main PERS, will tell us who is qualifying and who is not. And that we may provide an opportunity for employees to make voluntary contributions into a defined contribution plan, and we'll match them on a ratio that's recommended by the manager and adopted by the town council. I don't know if you're aware of it, but you adopt it in your budget every year. Every year we create the percentage. The next major shift was in annual vacation leave. You'll see that there was some leftover references to 30 and 35 hours a week, and that's because long before I ever got to the town, 35 hours a week was the full-time schedule. That changed to 37 and a half hours a week, and now it's 40 hours a week. So I just tried to make it clear that a regular work week is 40 hours a week. And we will, that they have to, that they earn vacation when they're in full pay status for their regular work hours. The one piece that I noticed when I went back through here, I need to put some reference in here for the fact that people who work less than 20 hours a week average, or 1,040 hours a year, they have to work 120 hours total to qualify for the 1 hour a week after 40 hours. So I'm not exactly sure how we're going to do that. I'm going to let Matt Tarasevich suggest some language on that, but I want to just comply with the law. And the other substantive change here is part of this new state statute. Right now, we say when somebody is on probation, which for us is 6 months for non-union workers. During that first 6 months, they're not allowed to take their vacation time unless it is a specifically negotiated item upon hire. And we have to change that because the new law drops that to 120 days. So that went from 6 months to 4 months. So I also, as we go through, tried to take out places where it had kind of gotten in the weeds a little bit, and clean it up. When you get to the administrative leave policy, we have one of those. You adopted it. And instead of trying to restate it in ordinance, I would think that you want to keep that in policy and be able to control it. I don't know if I'm going too fast, but when we look at section 799, nope, section 2881, I'm on subsection B. you're gonna see that I've tried to give myself more discretion around extending paid leave, sick leave, or just determining kind of when leave without pay might be offered. And the reason I've done that is to comply with the requirements under the Americans with Disabilities Act. That this originally was written that I would have to come back to council to get permission to give somebody extended paid sick leave. And I understand why that was given, except that if I'm in the middle of negotiation with an employee who's on Americans, who is covered under the Americans with Disability Act, that really is not a discussion for the town council to be part of. And you, as a matter of operations, are not. So I'm trying to kind of align this language with the practice, best practice around working with employees that qualify under the ADA. You'll see I've added a lot of in their sole discretion, in my sole discretion, the manager in her sole discretion. And the reason I do that is if it's not in the language, if it's not in the ordinance and I say that something should happen and I have very good reason for it, if we don't put that it's in the town's sole discretion, then that opens it up for negotiation. The more you open things up for negotiation, the harder it is to keep consistency. So we have here on an operational basis a pretty solid idea of what we would accept for on the basis of consistency, that people's individual circumstances are different, but in general, here is the kind of the box that we live in. And if we think it's in that box, we will accept it. And if we don't think it's in that box, it doesn't work. If we think it's on the line, my general philosophy, and I think it's the town's philosophy, is tie goes to the employee, meaning if it's questionable, we do whatever's in the best interest of the employee. Paid administrative leave to mirror your policy. I just put in here that benefit time does not accrue. So if somebody is on long-term paid administrative leave, and there are times when that happens, if we are at the tail end of a Americans with Disability case, there we will sometimes put people on paid administrative leave to get them, for example, to another month of health insurance as they apply for disability. But we shouldn't have to also pay them, allow them to accrue benefits when they're not coming back to work. So that is what I have on that. So this is just a small section of the personnel policy, but I kind of figured that it would make sense to try to clean it up a chapter, an article at a time.
Sophie, I had a couple of questions as I read through that. I was actually pretty interested in this. In the section in the employee assistance program, it's only available to full-time employees. I would have thought it might be available to permanent part-time employees as well.
So I will tell you that our employee assistance program is available to everybody. So that, Tom, I missed. Oh, Bell is, yeah, it's available. If somebody is on our payroll, it's available to them.
Okay, good.
So let me fix that.
And the only other question I had is on jury duty.
Yep.
I've only served on jury duty once, and it was not a long period of time. And I was retired, so it was no compensation involved for my employer. But there's a limit of 30 days in the section on jury duty. Does a person ever go more than 30 days in jury duty? Maybe Cindy has an idea. I'd hate to see somebody penalized for doing a public service of serving on a jury if it went more than 30 days.
think, Tom, if they were serving on the grand jury, they could be called in every month for a year. I think that's a year appointment.
It is.
And, you know, there are some big cases out there that go 4 to 6 weeks. So,
Hmm.
you know, I don't know, not many, but there are there are out there.
Yeah,
What about language, Tom, that would give me the discretion to extend it if warranted? Or
yes, I think that'd be good. I'd hate to see somebody penalized for providing that very important service.
so the most I've seen is 2 weeks, just
Yeah.
if that is helpful.
Other questions or comments on this?
Yeah, I have a comment on the sick leave. After B, I guess B is sick leave. So there's annual vacation leave, then there's sick leave. There was just, it's a grammar thing. In the first sentence, it says, but shall be allowed only in the case of actual personal illness, disability, or exposure to contagious disease, but then goes on to mention other times you can use sick leave. So I think that the word only should be removed. Because right after that, you have other ways in which you can use sick leave.
I think I know what they were trying to get at. I'll have to think about how, I don't think it's as simple as just only, but you've made a good point. I think what they're trying to get at there is sick leave is not a right. You can't come in and tell me you want a doctor's appointment on such and such a day and you will take it off. I mean, we try to accommodate, but we can't always. When somebody is sick or disabled, you know, they're unable to come to work, that really is at their discretion unless they hit 3 days. So we're not sitting there saying, no, you can't, you have to come in. But let me see if I can figure a different way to say that so that it makes more sense for folks.
So one of my job experiences was working for the federal government, and when I was working for them, they changed the policy. This is a long time ago, but they changed the sick leave policy so that if someone had an extended illness, they could use sick leave of other workers, which was great for the people who had extended illnesses that had gone past their sick leave. I assume that it's too arduous for the town to offer something like that because we need to, it would probably be very expensive. But I, as an employee, that was like a great thing because there were some people who were very new, so they hadn't accrued about sick leave. And if they had an illness, then there was no sick leave to take. And so that was a benefit that they could then, so for the people who are new employees, even just being able to have a week of sick leave shifted from one employee to the next was a really great benefit for workers. But I don't, our job is to manage the town to be the best it can be without costing us a lot of money. So I don't know what the implications would that would be. But as I was reading through that, that's the only thing that I remembered from a previous work that I appreciated as an employee.
So I will tell you that as part of the police contract, they negotiated a sick leave bank. It is quite strict, and they gave some stuff up to be able to get that. The fire union has talked about it. I would assume they would come to the table. It would be quite strict, and they would give some stuff up to get it. I think one of the reasons why I'm a little more willing to go down that path with police and fire is that they have to meet some pretty arduous fitness for duty standards in order to be able to come to work. We are able, because the rest in the non-union environment, to look at people on a case-by-case basis. And instead of having to deal with trying to manage a sick leave bank, which sometimes will incentivize people to take time off when maybe they don't really need it, because if they use all their time, there's a bank that they can go to. And instead, we look at a case-by-case basis. If somebody is severely hurt or severe or very sick, we use our discretion to be able to help them with on some paid leave. That has happened a couple of times, but we look at all the things that you saw in the paid leave discussion, you know, the quality of their work performance. It gives us a little, one of the things I look at is somebody talking about, is somebody booking out, you know, as soon as they accrue a half a day of sick leave, are they taking a half a day off or a whole day off? The other piece, Lori, I don't know if you had income protection, but everybody here is offered income protection. So if they're out for more than 7 days and they accept income protection, they can get paid up to 70% of their wages from our insurance, from an insurance carrier, not on our books. And while they are on FMLA, which you would assume it would be a qualifying FMLA, they do not have to, if they qualify for IPP, they don't have to use their sick time. So, and that 70% is not taxable. So it's pretty close to your net paycheck.
That's great.
Other questions or comments on these policy revisions and changes?
Yep, I just had a quick question. It probably is in line with some of the explanations that you've given about the in their sole discretion, but under administrative leave, can you just speak briefly about the removal of department heads being given the ability to grant time off?
So department heads have the ability to send an individual home at any time on paid leave for a day, and then we can come back. When I got here, there were 10 different department heads with 10 different thresholds for what administrative leave would look like, and it turned into something that was incredibly inconsistent. There is absolutely nothing else that department heads here do with regard to HR that where they have that kind of discretion. And so operationally, I have taken that away. People have the absolute right, if somebody is not in the right headspace to work, is too sick to work, has engaged in behavior that they're not happy with. Even supervisors have the right to send people home, and that's paid leave because there is no due process with that. But their second step is then to call me, and if I'm not available, to call Bell, and we will walk them through to make sure that we're giving paid leave in a consistent way, because we don't want to do something where somebody could say, if you're over 40, we're not giving you the same benefit that is if you're under 40, or if you're a female or a male. You know, I just we need to make sure that we have a similar way of thinking about that kind of leave.
Good. Any other questions or comments? Sophie, I assume that this is going to eventually go to the full council.
It's not gonna, so I wanted to get your general thoughts on this. And if you had said, we don't like the framework at all, and we just want to
No.
blow it up and start all over, then we could have done that. But now it's gonna go to Matt Tarasevich for legal review to make sure that we are compliant with state and federal laws and other regulations. When he's done with it, if there aren't major changes, I'll then work with the council chair to calendar it. And if there are major changes, I'll bring it back to committee.
Great. Thank you. That was
That
good.
was easy.
Yeah. So I think we're ready to move on to review of monthly financial reports.
So I gave you a few,
Yep.
and I thought we could just run through them real quick. I will tell you that we do have an issue with our tax collection report for FY 21 real estate tax, and I have not been able to sit with Shelley yet to correct it. We've identified it, but it's going to take some time to correct it with Trio, because when tax payments come in, they are batched, which means you do during tax season, when we open the mail, we would put 15 or 20 of them together and run a batch. Unfortunately, there was a glitch in the software, and it hit, there's a general ledger side and an actual account side. So every taxpayer has their own account. So it hit the general ledger and not the account. So we've got to go back and manually try to figure this out with Trio, because we don't want to compound the problem. But I just wanted, there will be a change next month when you see that. Potentially. And just for people who are watching or listening later, we know exactly whose account, who paid what. So it's not like it's a mystery. But I think receipts are coming in pretty good, and I was a little bit nervous, but I think we're doing all right. Excise tax, we were way ahead for the first 3 months of the year, and then we've dropped off. We'll have to see if that's just going to bring us back down to par where we were, or if this is the beginning of a drop off that we'll see moving forward. I think we were way ahead because we had a lot of new cars and new leases that were coming in. Revenue sharing, if you
Sorry,
notice
what do you mean?
on your,
You mean way ahead mean because you didn't project there'd be that many new cars and leases, we're getting more money because the newer
So
ones bringing
we-
more money?
yeah, so we had estimated that we would bring in $780,000 of excise tax. That has been our estimate for the last 3 years. Last year, we fell a little bit short. We assumed that that was because of COVID, so we kept that 780 the same. If you look July, August, and September, not so much September, but July and August, we were we collected more excise than we had in previous years, and we've gone back 3 years here for you. Just so you're aware, we go back further than that in our records. Revenue sharing. We've tried to simplify this chart, this graph for you a little by taking off previous years and just looking at the yellow line at the bottom being what your budget estimate is based on. The red line being what the state projection was on August 4th, and the blue line being actual. And I've said it before, but just for somebody who hasn't been here, we are not given our projections based on months. We get an annual projection. I have created the projected points by taking the average percentage that is collected in each month and attributing that to the overall annual estimate. So this is not, this is an estimate. This is a guesstimate. And we are doing better than even the state thought at this point.
Wow.
Yeah.
That
We
is
might
good.
be able to, we might be able to help our fund balance a little bit here, Tom.
That'd be nice. Neat.
So cash looks pretty good. I keep a pretty close eye on our cash levels. In the general fund, it's really nice to see us up, close to 8.3 million at the end of the month. Right before we committed taxes, we were scraping about 3 million, which is not a place I'm really comfortable with. We were watching it watching our books regularly to make sure that we maintained a good balance to continue paying the school and our employees. Questions about the treasurer's report?
No.
So I don't know how you want to do.
So if we had a
the-
quick question on the revenue sharing, do you think the CARES Act money is helping the state at all with that?
Well, that shouldn't impact the revenue sharing because the revenue sharing is income tax, sales tax, financial services, fees. So it's not all state revenues. Where I do think it's helping, Cindy, is it's allowing the state to put forth some programs to bolster business and to assist keep the economy open, which I think is absolutely
Yeah.
helping revenue sharing. I think if we end up closing the economy back down without a good plan for unemployment insurance, like another PPP or some of those programs that were here the first time, we look at Teddy the Tank. We I think would potentially see a much bigger hit to revenue sharing. As soon as the economic engine slows down, we will see it in revenue sharing.
Sophia, are there items on the revenue side of this report that you'd like to bring our attention to? Anything that stand out to you?
No, I've talked about the big pieces. The one that, continues to stand out for me is in charges for service, ambulance fees are still kind of
Right.
sluggish for this time of year. And
Yep.
it's a good thing that we've got some revenues coming in better than expected and some savings on the expense side to help us kind of balance that.
Okay.
The other place that, when you see electrical permits at 8.85%, we have kind of changed some of the way that we manage electrical permits because Bill was an electrical inspector and he is, he's almost in retirement. He is not working. And the alternate electrical inspector that we use gets a cut of the fee. That is the way that works.
Yeah.
So, and that is standard in all communities. I was surprised when I came to Orono to see that you guys actually had electrical permit revenue. And then I learned that Bill was an electrical inspector, so that kind of made sense.
Mhm.
I think those are the big ones.
I have
Yep.
I have one last question if we're done with revenue, on revenue.
Yeah.
And it's the very end, and it's the hazmat, the use of Penobscot hazmat funds, where we have
Yeah.
a $12,000 uncollected balance. Is that the time that our team went out to escort okay.
Right. So the hazmat revenue from the county is actually a payment from the county for they give us money with the understanding that if there is a hazardous material call in Penobscot County, that we are going to go. And unless it is clearly somebody's responsibility. So these are the things that somebody dumps something on the side of the road in Penobscot County outside of Orono, the hazmat team has to go. There's nobody to bill. That's what this comes back to. And every year they give us money. Last 2 years ago, Chief Lowe and I went to the county and demanded more money. Nicely. So we bill
And that
that.
was effective?
It was, we got another $8,000, which was.
That's great.
That's good. Well, our threat is as soon as hazmat costs Orono taxpayers more money and we can't fund it on the hazmat fund, I'm quite sure the Orono Town Council would think twice about doing hazmat. And the county is scared because they don't want to have to do hazmat. So and the Bangor chief goes and says, give Sophie and the chief whatever we need to so that you don't expect Bangor to do hazmat. And so it works out well. But that billing, we bill that on a regular basis. And that budget actually comes out of two county budgets, their regular county budget that we all pay into, and also the unorganized territory budget, which essentially is the municipal tax budget for the unorganized territories.
Thank you
And
for that. Yep.
you're welcome. And you will notice that we have received the entirety of the CTCL election grant. We got a check for $159,000. So now Bell and Shelley have to spend it on a legitimate election related items. One of those items, Belle, do you want to talk about the photocopier?
I can, but I would have to move because it's noisy and where I am.
Okay.
If you'd like to
So-
cover it, I'm sure you do fine.
All right. So I think I don't have the number in front of me. My recollection is that it's about a $13,000 expense. Our argument is that the photocopier downstairs, which was relatively new, got so much use printing material for this election and election stuffing, things that got stuffed and sent out and posters, and that we need to replace it. And so we have gotten the quote for the photocopier to go downstairs, and the old photocopier is found a home in a less user-based, with less use. And that photocopier is getting transitioned out for Rob to get the end of the oldest life out of that. So I asked, is this a legitimate use? And, is that a legitimate use for the grant based on the description of what an allowed expense is? And it fits right in with it. So we are very happy. We plan to put that on the agenda for Monday's meeting. That 13,000 also included 2 printers that connect to election laptops to be used at elections, for elections. So we're trying to be ethical. Well, we're not trying to. We are ethical. But we are trying to maximize the legitimate use of these funds so that we can limit what we have to send back.
Good. Excellent.
Oh,
It's
the
a big jump between, you said it was $109,000, and then the copier is $13,000. So what other kinds of expenditures are you looking at?
So it's 159.
Oh.
We've got a trailer that you guys approved. We've purchased a lot of signage. We've purchased storage totes and things that would allow us to get our stuff. We've paid for extra cleaning supplies, a lot of election worker time, because the way we had to set it up, it cost us more. So there were some direct costs associated with all of the in-person absentee voting opportunities. Those costs were covered. Things like we used to do either our own food for volunteers at elections, or pizza, something cheap and easy, in order to comply with rules around serving the masses. We had to go to box lunches and box dinners, and those were more expensive. We are covering, Public Works had overtime, setting us up and tearing down for several of those election activities, along with the big activity on campus. And we are responsible for having the field house cleaned, which will be quite expensive. So we're going through right now. Shelley has done, I think, a really nice job of trying to identify things that are clearly election related, are not supplanting items that we would already have budgeted for, but that hopefully we can get multiple years of use out of, is kind of the goal. It would be nice if we could just get a check for $159,000 every year for elections.
Other questions on revenue, folks? Are we ready to move on to expenses?
So I'm going to assume that you're going to ask me what I see in expenses.
Yep.
And some of the things I see don't necessarily stand out because we're not that far into the year. But advertising and outreach, in order to get our messages out, we have been using, we've done social media and signage, stuff like that. But we've also been doing things like postcards, because people aren't gathering to see signs at stores and stuff like that. So I think in order for us to effectively communicate, I can envision at least a few more rounds of postcards going out if we stay in this fairly locked down environment. And those are expensive. That's over $1,000 when we do that. So just to kind of keep that in mind. Workers' comp, across the board throughout the budget, our workers' comp rates are going up. And we have enjoyed the benefit of, experience ratings under 70.7, which is pretty amazing. Unfortunately, it means when we have a couple of major workplace injuries, we end up with an experience rating of a little goes up. We have not gotten the bill yet. Workers' comp is due. The application is just due, and we'll get the bill sometime before January when the next year starts. But that is a place I'm very concerned about. I think in public safety, we have the historic issue with the fire department. We have people who are still out. We've got one person who had an accident and has been out for a month and a half, is now back to part-time, but not full-time quite yet. So that will kind of take time, take money. I'm sorry.
Sophia, I understand the sick coverage situation, but I was surprised looking at vacation. Unless I'm looking at the wrong line, that we are.
Yeah, so one of the reasons that is so high, Tom, is that during the summer, before we hired our person early, we had taken the floater and put them on shift because we've got the long-term workers' comp case. So that person, when we built the budget based upon that floater being able to cover a considerable number of vacation shifts. As soon as the floater went on a shift, we
Yep.
lost that and we had to cover it with overtime at that point.
Okay. Gotcha.
Sophie, can I ask a question? And this is just temporary, but if we've got an employee who has been told to quarantine
Yep.
for 2 weeks, are they, and I'm thinking more like the police or fire department people, how do they get compensated for that if they're not allowed to be with
Well,
group?
it depends. Federal law has, if you're directed to quarantine by a government order or by a healthcare professional, there's 2 weeks of pay up to 40 hours that we are required to give. It does not come off, it can't come off a sick leave accrual. It's just it's a federal mandated payment. So it goes right through their regular, they just continue to get paid as if they were working. Healthcare professionals, under the Workers' Comp Act, communicable diseases are a presumption that it's work-related. So if somebody on the ambulance went to a COVID call, contracted COVID, or had to quarantine because of that, that is compensable. So we would then decide, Belle and I would sit down and talk about if that person just needs to quarantine for 2 or 3 days while we wait to get a test, and the test is otherwise covered, I probably would not put in for the comp insurance to pay for the time, because that hits us harder than the medical expense. So we would just pay them, but that is not sick leave.
And is that going to impact the budget for next year at all, or does it impact us in any way if you can't account for that? You can't account for the time that's off, right?
Can't account for, can't.
Well, if you're paying them like if they're getting paid like they're working, then technically it's not time off.
So they get paid like they're working. Bell has set up a special code in ADP that
Okay. I was wondering
so
how
we
that was
can
gonna
track it, but it will hit the regular full-time wage line.
work. Okay. All right. Yeah, I imagine this is only going to be temporary too.
Well, that federal,
Oh.
the federal wage is set to expire on December 31st. And everybody thought that was so far away until we get to November.
Any other questions on the expense information material?
Well, I was curious about the pump testing in public
Yeah.
safety.
So we are required, I was looking for the, when we put the budget together, we that used to all be one equipment budget line, and the chief broke it out into many sections and he estimated. This year, the pump testing cost to get somebody here and to do the testing costs more than what we had anticipated. Not that we ran into a problem with the pump. Is that helpful? Okay.
Any other
The only-
questions?
Oh, I was going to say the only other question I have is just I'm curious about the Orono Basin TIF.
So I need to go back in as part of your original adoption of the budget and setting all those financial orders at the beginning of the year. You give me permission to adjust the orders to reflect the actual tax bill and credit enhancement agreements that are given in the TIFs. That is a situation where we made a best estimate on value during the budget, and it came in better, which is great. That makes me really happy. I would love to have an over expenditure for that reason.
Good to hear.
Yes, indeed. Anything else, folks? I think we are all set on the financial report. And I think the only thing left on our agenda is a brief town manager's report. You're breaking up.
Oh, can you hear me now?
Yes.
Okay. I have two items that I kind of want to speak with you about. The first is just to let you know that following up on a discussion that I had with council several months ago, community development staff has really been working with businesses to try to find ways if we can help them manage their business, to be able to get customers through the door, if they need help rewriting a liquor license. So instead of a tavern, it's a restaurant so that they can be open. We've done a lot with allowing people to kind of spill over into public spaces with outdoor dining, or the general rule of thumb is if it can reasonably be accommodated, we're trying to do that to help our business community. So we have a very firm agreement with the owners of 19 Mill Street about the temporary patio and the use of the parking spaces in the alleyway between Margarita's and the brewery. The issue that we're running into is that the brewery has a tavern license. They were supposed to be able to open on the 2nd, and then the governor changed that. So we had initially given permission for the outdoor seating area to continue through the end of this week, with the idea that it would get picked up and we would go through the winter. When the governor changed changed the decision to allow taverns to open on the 2nd, we were approached by the owner asking if we would consider to allow them to try outdoor seating longer. So when I look at that, because there are some modifications that have to be made to the business in order to be able to qualify for the restaurant license. So I looked at a couple of things. I know those parking spaces are really important to the downtown activity, but the capacity downtown has greatly diminished. And I really felt like, in the spirit of what council was asking us to do before, allowing somebody to maintain some seats outside and impact those minimal parking spaces while COVID is an issue, with the understanding that if we run into any problems maintaining a safe alleyway for people to drive, walk, whatever, roll through, that it would have to change. It seemed reasonable to me to give the owner an opportunity to try to make that work. So we have not changed the agreement that's on file at the Registry of Deeds. However, we are working with the owner right now to create a temporary written acknowledgement between the town and them to allow that to continue for a period of time. I know sometimes those parking spaces are a hot topic that counselors might hear about, and I wanted you to understand that we really did give this a lot of thought, weighing not only the benefit to this business owner, but the impact that it might have on the rest of the business community downtown.
Yeah, this is a very specific, unusual circumstance, and the other similar businesses in town already had the option of their own outdoor seating, so they're not as impacted by these fluctuations in the rules. And I'll say, as someone who is one of the downtown business owners and is always managing the restaurant on Fridays and Saturday nights, we're not right now, we're not missing those parking spaces. The only thing that I will say is that I remember last year there was sort of like almost like a temporary sidewalk that they
Yep.
kind of constructed with string and barrels. And,
Yep.
of course, as is long history in Orono, people still just walk down the center of the alleyway, whether there's a sidewalk or not. But I have wondered about that. It's not, because there's not the temporary sidewalk this year. And if we are going to allow them to extend their hours and then snow and ice become an issue, whether we have to take another look at that just for safety reasons.
I think we absolutely want to take a look at it for safety reasons. He has suggested if the town had Jersey barriers, we could put Jersey barriers up to help create kind of that sidewalk environment. One of the things that Rob needs is a certain amount of space, because we clear that with the scoop, which is the pusher, and that doesn't, that is kind of the size it is. And so I made it really clear to Rob that that he needed to tell me what was going to work for not only pedestrian safety and travel safety, but also he's got a whole setup downtown around where things get piled and how things get cleaned up, and he's got it timed down to minutes. And we need to find that balance. I want to help this business owner, but we can't upend safety or operations to do that. So my next item is I've spent some time today. You're going to see a press release come out. I just got a text letting me know that it had dropped. And it's a joint press release between me and with the university and the town. So President Farini Mundy and I were both quoted talking about the fact that there was there's a small outbreak of COVID on campus with some staff. And we also have some in the community. We've got a few cases. So we would expect this. This is not unexpected. The cases in the state are trending up. We would expect to see some here. We are not sounding an alarm, but we are asking people to be kind of vigilant and for this to, for people to really pay attention to wearing their mask and washing their hands and staying away from people they don't need to be around. I will say, once again, the relationship between the town and the university, we received notice, we've been in conversations. I've had the town has been involved in 3 different meetings / conversations today, culminating in one with the president and a large group of her decision makers. So I am very impressed with how concerned the university is about making sure that the town is part of their decision-making process, and that they're considering considering their students is really important, and they're doing that. I think they're doing a great job, but they're also really considering how it is impacting the town. And have just been incredible.
Good to hear that. Cooperation.
Cooperation, yes. I think those are like the 2 major things that I have. I don't know if counselors have anything else they wish to.
Sophie, can you tell us how many are in the outbreak, or is that not public?
On the town side, that would not be picked up in university numbers. We have 3 confirmed cases and 2 probable cases that I'm aware of.
Okay, thanks.
Any other business to come before our group this evening? If not, there's a magic motion that somebody could make.
Motion to adjourn.
There,
Second.
wave your hands and we will see you Monday afternoon.
All right. Thanks
Thank
all.
you.
See ya. Yep, bye-bye. Thanks, everyone.